Hi all, this is Ashish Kyal here. Welcome to Ashish Kyal Trading Gurukul. It's going to be a very short video just for a few minutes where I'm going to teach you how to trade options using moving average. So options को trade करने के लिए काफी सारे method है, लेकिन we are going to look at simple moving average. So what is an average? An average is nothing but it takes the summation of the price data for the period that you set and divide it by the period. So if you are in a school and you want to know the average height of a student in the class, you take the summation of say 60 students and you divide by 60, you get an average. Why we call it as a moving average? Moving average means that with each new data that we get in, as when we are applying it on stocks or indices, with each new data that we get in, we remove the old data and we continue to take an average of that. That's why we call it as a moving average. Now moving average is a lagging indicator because it turns later than the prices itself. So if the prices are turning now, the moving average will turn back later. Now you might think that this kind of a system, how is it going to help if it's a delayed or a lagging signal? Moving average will provide support or resistance to the prices also. So if you can apply this moving average concept directly on the option chart, you can have at least a method for trading the options. Let me very quickly share across an example with the help of a chart of a call option of 17,000 call option expiring in the Feb end. So we are taking an example of that so that you are able to understand how to look at that moving average. If you are looking at the overall chart here, you might be able to see that I have plotted two different moving average on the option chart directly. One of the moving average period, the red one, is the period of 30 days or 30 period, I would say, and the blue one is 60 period. Now, why did I select a 30 and a 60? Because 30 is providing resistance to the prices. That is what you can clearly see on most of the occasions. Also, when the prices are above the 30, it is providing a very good support as well. And that is why I am choosing a 30-day, 30 period moving average, because this is a 15-minute chart. So I'm calling it as a 30 period moving average, not a 30-day. Now, if when you apply this average, you can see that the red one is working excellent in terms of providing support and resistance to the prices. Whenever prices reverses from the red one on the downside, you will be able to see that it has continued to move lower. Also, the blue one is providing resistance here. You can see that. The technique is whenever we see a crossover happening along with a higher high, higher low formation, it provides a good trading opportunity for option traders. What does it mean? Whenever price is crossed above, from the bottom, it crossed above. Along with that, we see a red moving average crossing over the blue one. It's an opportunity to buy. When we see a higher high and higher low formation on the prices as well. So this has continued to work well. Similarly, on the downside, you will not be using only the moving average crossover system because it might trap you. What you also need to see in these prices. So over here, the red average crossed below the blue one, which was a trap. So what you have to see is you need to also see a lower high and a lower low formation. So this high has to be below this high, this low has to be below this low. This way you can make the system much more appropriate without trapping you near the reversal areas or near sideways actions, to be honest. With this method, if you would have followed, you would have stayed in the direction of the downtrend by selling 17,000 call option all the way till this level. You would have stayed on the positive side around this level. This can be used purely for intraday. You can carry positions for 1 or 2 days and trade extremely well. Now over here, the crossover happened at this level. You see a lower high and a lower low formation at this level. So you could have sold option and would have made a lot of money in the downside trend. Similarly, on the upside trend, you had a higher high and a higher low formation right here, giving you a classic buying opportunity. Okay, this is how you should be looking for moving average crossover along with the formation of that. look at the recent price action. Prices moved towards the blue one, reversed back on the downside, also below the red one, and there was already a negative crossover that happened. And from there, the price continued to move lower. Now, looking at this setup, we can clearly see that even now it's not on the buy side. So you will still not buy 17,000 call option now. You will wait. Now, if prices continues to move up, and also you see the red one crossing the blue one, it will give us a classic buying opportunity if that happens. If that does not happen and prices can't break down, so it is continuing to be on the sell side. So moving average crossover plus Dow theory, higher high and higher low, or lower high and lower low formation below that moving average can give you a classical opportunity to trade the market. Now, this is a very simple system of trading, and if you use this simple system of trading and apply it on options chart directly, you can trade extremely well. So keep subscribing to the channel. The channel name is @Kyal Ashish, and I'm sure the YouTube channel and the Twitter handle is @Kyal Ashish. You will keep learning with such short snippets of how to trade markets objectively without getting carried away, even in this euphoric or the news driven event that we are seeing globally. This is Ashish Kyal signing off. Thank you very much. Stay tuned, and for any details, contact us on 99 204 22202. Thank you.